Hey traders, someone in the chat room asked me to review Nvta. I haven't done this ticker in a long time, and this is just merely because Henry asked. There you go, Henry. Okay, so this is a 1 year, a daily chart, about 1 year's worth of data. Nothing here, by the way, is going to be like trading advice. I'm just reviewing the chart based on my eyes. This is not enough for me to form an opinion because it is lower than it has been, and I don't know what comes here. So when I see this, I have to expand. First of all, I see that they lost a recent bounce level, which is pretty devastating from my perspective, because that's where the bulls would have hung their hats. Why is it down? However much down today? Come on, 2%. On a what started out as a correction day and then immediately bounced back and closed on record highs. So it's a bullish day from that perspective, even though the scoreboard is not bullish, but it was bullish that they bounced off of 4432 in the S&P and ran to 4475 or 6, almost 7. So what's the deal, right? So that's the first level of concern. So I have to expand. I'll go to a weekly. Now I'm already seeing a whole bunch of good stuff. Whenever I do this, I usually go like this to make sure that it wasn't like a fluke. And so now we're looking at 5 years worth of data, in this case all of it. And it came out of the box. It took it years and years to come back and break out. But the levels are important. So this is where it is right now, that pink line. So arguably, that area was a problem for its life until it broke out in February of 2019, where it hit it and broke out from a prior sharp fail at 1845. So anything below 19 now becomes like, why should we go there type of a place. And then they bounced and ping-ponged sideways with a clearly bad dip on COVID. So I would ignore all of the COVID shakeout, except to say that it confirmed that this area was worst case scenario when the world ends. They basically shut down the world, so the price went where it would have been. So I would draw a line down here in this zone and say this is where I would go in on the stock if I'm not long. Oddly enough, that will close this gap right here. Not every gap closes, but this one sticks out. So if we have a shakeout in the stock market, this will probably go to under 20. And if that's the case, I'll put an alert to myself here. I'll make it higher actually. I'll make it a 20 and say, hey, pay attention. Start looking. So I do these because under duress, we tend to hesitate. We're scared of doing anything. In fact, I should do this higher. So I want to start looking at it if indeed it trips. So technically, it could have tripped already based on today's close, but I'm not going to immediately give it a bath on that one. What I can say is sharp fail, sharp fail, sharp fail, finally broke away from it, used it as a base for all of this, came back and successfully tested it, and now they're losing it. So it's not a hard line in the sand, but the next couple of bucks are super critical. This would be 21.30 would be they shouldn't lose it. But if they're close there, people who chase gaps will start salivating. In which case, I'll say here gap closed, which means start looking seriously if you're not long already. This yellow line here is the heaviest point of contact. This is where it's traded the most in the last 5 years. It's by far that one right there. Look, the volume. So this is all these volume bars. They are represented up here by price, which is informative. This doesn't tell me anything except that on that day there was heavy volume. On this day there's heavy. Here it tells me at this level everybody's interested. So price is truth. Look left. You'll find where price is. You'll find your levels. Technically, it is a problem losing this. Do I have lines? Ooh, I do. Okay, perfect. So look, I don't remember doing this before, but apparently I have. So this line I've probably drawn somewhere in August of last year, and I stopped it. And it was pivotal then, and it remained pivotal now. So if I extend it to the right, this is the level they fought for and just lost. I'm going to leave it back there. Now, these levels have failed, and up here at a certain point I said there was progress, and then tightening battle. So the two white lines were playing against each other, and guess what? If I extend the white line, that battle never stopped, and the level was lost by the bulls, and the bears are in control, but the bulls are now, watch this, I'm going to do this and move it here, and again, it's not a hard line in the sand, but the battle went from tightening to ongoing with lower highs, trying to establish a footing. They haven't found footing yet. They keep making lower highs, but in this case, maybe they stopped making lower lows, except today's candle, not so good. But I won't write them out. I'll give them one more day to see what they do. So making lower highs is fine. Stop making lower lows is job one. And then what happens is the way you snap out of it, if you find support, I was having an argument with somebody, not an argument, heated discussion. They brought me an article and I was trying to dissect it. So ping pong inside this, as long as you hold the floor, then you can crack above it and start making higher lows and maybe create another trend of higher highs eventually. So lower highs is okay as long as you stop making lower lows and you tighten the battle, and then you inch up against one failure level, another failure level, and then you start building momentum back up. So that is the chart discussion of this company. Now I have to admit I don't know their fundamentals by heart, like I don't even have a clue. So we can refer to this handy dandy thing, income statement. That's the first place I look at, because that's the proof is in the pudding. Total revenue, pretty aggressive growth from, let's say, 2018, 150 to 400 almost, more than a double on a trailing 12 months. Even last year they had a good year. Net income, okay, so it's growing, but it's not a extravagant. Price to sales 17 or 18, that's pretty reasonable. So probably cheaper than Tesla at this level from that perspective. It's twice as much as Apple, just to give you relative terms for a fast grower. So it's not crazy, but then again, I don't know the industry. So that might be pretty crazy for the industry, but in absolute terms, it's not crazy. So it being a gene type of a company, I don't know if it's a headline, prone to headline type of a company. I don't see it in the chart. They're usually like seesaw like this. But if it is, so it's every day is like an earnings day. So you have to accept the risk of washout or blow up in a good way out of the blue. But in this case, the price action may have gotten ugly today, but I won't completely write it out. So those are the white lines we just drew. Again, it's not a hard line in the sand. If it were, I'd put it up here and I'd say, uh-oh, game over, people. But it's not. The close was just above this one, just above. So this would make it proper statement. Okay, so they still have one. Where was the lowest close? This is the lowest close. Anyway, we're splitting hairs. I'm not that surgical about it. Other people who are technicians are. Me, I'm an engineer who figured the stuff out. And look at this. That's the gap that's down here. And that candle was just insane, but probably on some headline something. Somebody should put a widget where headlines pop up here. Like you say, okay, that was a headline or something. But in this case, this could be the start of something ugly technically. However, there's reprieve right below 20. So the worst case scenario in this case is $2. On a base of 25 is a lot of money, but it's not a washout scenario based on the chart. Hopefully that helps you out, Henry. Keep the questions coming. Nick signing out.